card versus debit card. You've probably used both of these today without thinking twice. But a credit card and a debit card work in completely different ways, and mixing them up, or using the wrong one at the wrong time, can quietly cost you money, damage your credit score, or land you in debt. By the end of this video you'll know exactly how each one works, when to use which, and the rules that stop a credit card from ever becoming a problem. This channel exists because nobody teaches us this stuff, not school, not our parents, not anyone. So we do it here, in plain English, no jargon. Today we're tackling something that confuses a lot of people more than they'd like to admit. Credit cards and debit cards look identical. They're both rectangular pieces of plastic, both have a chip, both tap contactlessly. But the way they work underneath is completely different. And understanding that difference matters, because one of them is spending your money, and the other one is spending someone else's. Let's get into it. What is a debit card? Let's start with the debit card because most people get this one first. A debit card is directly connected to your current account. When you use it, the money leaves your account immediately, or within a few seconds. There is no borrowing involved. No bill at the end of the month. No interest. It's simply your own money, accessed through a card. When you tap your debit card to buy a £3 coffee, £3 leaves your account. That's it. Simple. The word debit actually comes from accounting. It just means money going out. So a debit card is literally a card that takes money out of your account. What debit cards are used for? Day-to-day spending. Groceries, petrol, lunch, online shopping, subscriptions. Anything you're paying for out of your regular monthly budget. Now, what to watch out for? The main risk with a debit card is overspending. Because it's pulling directly from your balance, if you spend more than you have, you can go into your overdraft, which some banks charge fees for. So keeping an eye on your balance matters. One other thing worth knowing, if a fraudster gets hold of your debit card details and makes transactions, they're taking your actual money. You can get it back through your bank, but it can take time, and your account balance is immediately affected while the dispute is being sorted. What is a credit card? Now a credit card works very differently. When you use a credit card, you are not spending your own money. You are borrowing money from the card provider, usually a bank, and agreeing to pay it back later. At the end of each month, your credit card provider sends you a statement. It shows everything you've spent that month and gives you a balance to pay back. If you pay it back in full, the whole amount, you pay zero interest. The borrowing was completely free. But if you only pay part of it back, or just the minimum payment, the remaining balance starts accumulating interest. And credit card interest rates are high. We're talking anywhere from 20% to 40% April for many cards. That means debt left on a credit card can grow surprisingly fast. This is where credit cards get a bad reputation, not because the card itself is dangerous, but because if you don't understand how they work, they can become expensive very quickly. The key rule for credit cards, and this is the most important thing I'll say in this entire video, only spend on a credit card what you already have in your current account. Treat it like a debit card, but with extra benefits. We'll get to those in a moment. What credit cards are used for? Large purchases, online shopping, travel bookings, building your credit score, and earning rewards. Used correctly, a credit card is actually one of the most powerful financial tools available to you. Right, let's put them head to head so this really sticks. Whose money is it? With a debit card, it's your money, leaving your account immediately. With a credit card, it's borrowed money, repaid at the end of the month. Is there interest? Debit card, no interest, ever. It's your own money. Credit card, no interest if you pay in full. Interest only kicks in on anything you carry over. Does it affect your credit score? Debit card usage is not reported to credit agencies at all, so using your debit card has zero impact on your credit score. A credit card, on the other hand, directly shapes it. Pay on time every time and your score improves. Miss payments and it drops. Now here's where credit cards have a major advantage that most people don't know about. In the UK, credit cards come with something called Section 75 protection. This is an actual law, the Consumer Credit Act 1974, that says if you buy something between £100 and £30,000 on a credit card and something goes wrong, the company goes bust, the product doesn't arrive, it's not as described, your credit card provider is equally liable. You can claim your money back from them directly. Debit cards don't have this. They have a weaker voluntary scheme called chargeback, which offers some protection but isn't backed by law in the same way. This is why financial advisors often recommend paying for flights, holidays, and large purchases on a credit card, even if you immediately pay it off, purely for that Section 75 protection. When to use which? So now the practical question: when should you actually use each one? Use your debit card for small everyday purchases. Coffee, lunch, groceries, petrol. Anything from your regular monthly budget where the amount is low and Section 75 protection isn't a factor. Also use your debit card when you need cash from an ATM, and this is important, always use your debit card for cash withdrawals, never your credit card. Withdrawing cash on a credit card is one of the most expensive things you can do. Most providers charge a cash advance fee plus immediate interest from the moment of withdrawal, with no interest-free period at all. Use your credit card for anything over £100 where Section 75 protection is valuable: flights, hotels, electronics, big online orders. Use it for building your credit score. A small regular purchase each month, paid off in full, is one of the fastest and most reliable ways to build a healthy credit score over time. And use it for any rewards your card offers: cashback, air miles, points. These are only worth having if you're paying the balance in full every month. If you're carrying debt on the card, the interest wipes out any reward benefit immediately. The golden rule, and I want you to remember this one. If you can't afford to pay for something on your debit card right now, you can't afford to put it on your credit card either. A credit card is not extra money. It's a tool, and used with discipline, it's an incredibly powerful one. Quick question before we wrap up. Do you currently have a credit card? And if so, do you pay it off in full every month? Drop your answer in the comments. It's one of those habits that makes a genuinely huge difference to your finances, and it's worth talking about. If this video helped you understand something that's been a bit fuzzy, hit subscribe. We post videos like this 3 to 5 times a week, all the financial basics that schools never covered. The next video is one you'll want to see. We're breaking down exactly how your credit score is calculated, and the things that move it that most people have absolutely no idea about. To recap what we covered today: a debit card spends your own money, instantly, with no interest and no borrowing involved. A credit card borrows money on your behalf, completely interest-free if paid back in full each month, and comes with stronger legal protection on purchases over £100. Use your debit card for everyday spending. Use your credit card for larger purchases, building your credit score, and earning rewards, but only ever spend what you can already afford to pay back. That's the whole thing. Thanks for watching, and I'll see you in the next one.